up, you got a 37 crore order coming in. So can you give us a few details? One, what exactly is your total order book? Secondly, what exactly is the breakup of that order group in terms of exports as well as domestic orders?
Yeah, good morning. Let me first explain you our new facility at Chalisgaon started production on March 21st, 2017. And afterwards, we start booking orders. Even before also, we were booking orders.
So what's the order book?
Today, as on today, order book around 60 crores. But this period, we booked 37 crores additional orders, mainly from the domestic market and exports. Out of this 37 crores, around 10 crores is exports and government supplies, dealers and projects in India. So total 37 crores project orders we booked recently.
All right, Mr. Mittal, you know, if I just pull up the one-year chart, stock has been on a crazy run. So clearly the street is expecting very, very good things from you in the coming year, maybe in the coming 2 years. So Mr. Mittal, if you could guide us, you know, and tell us what kind of revenues can you do in FY18, in FY19, if you could help us out with those numbers. Last year you did only around 64 crores. Now you're telling us your order book is already around 97 crores. So what kind of a revenue number are we looking at this year, and what is your current capacity utilization levels?
See, last time also I mentioned in the studio that this project started as per schedules in March 2017, and market sense faster than anybody sense, and this project is one of its kind in the entire world.
That's right, but
so order book position, if you consider this 60 crores these orders, and this year we'll be having around 35,000 tons, productions, and that amounts to around 300 crores rupees approximately, because sales price varied from 90 rupees to 150 rupees per kg. Is 1,50,000. So we are very confident to achieve this targeted numbers what we discussed earlier.
300 crores.
300 crore revenue in FY18 is what you're saying, Mr. Mittal?
Yeah.
All right.
And last year's numbers, what is published in the newspapers and the stock exchange, that is only pertaining to our old unit at Adgaon.
That's right.
So these numbers will be new units as well as old units.
So if you could tell us what exactly is the total capacity of the company, what exactly is the total capacity utilization, and what kind of realizations do you make? You said you gave a broad range, 90 to 250 rupees per kg. If you could tell us the average blended realizations per ton that you make of what you produce, if you could tell us these three numbers, the capacity utilization and average realizations.
Our aggregate capacity put together both the plants is 78,000 metric tons per year.
Okay.
Number one. Number two, the existing utilization of Adgaon unit is hardly 50%, but the new units will be gradually ramping up in 3 years' time.
All right.
So first year we estimated around 35,000 tons capacity utilization put together.
Okay.
And so far revenue is concerned that earlier units we generated very small revenue, but this year we'll be generating almost 300 crores revenues.
Fantastic.
And sales price, this is depend on the diameters of the ropes. This is very, very specialized technical, product or engineering products. So it's vary from even 70 rupees to 150, 170, 180. It can be any range. It's a wide range.
Correct.
Depend upon the customer's requirements and what applications are there. If it is very high-end application, then our price is very high. If it is low-end application, then price very low. If it is tender-based businesses, then we have to compete in international market as a domestic market.
All right, Mr. Mittal, I wanted to ask you a couple of things. You're going to do 300 crores in terms of a top line. What margins you're going to do? Last year you did around 8 to 9%, but at the peak I think you were doing even 13-14%. So what kind of margins will you do for the coming year? And give us a sense, sir, in terms of what is your debt in your books and what is the finance cost? We're trying to derive numbers that you can do in FY18 to give our viewers a clear view of, how is the company going to perform?
See, our total dates is around 330 crores for the new project. And average date cost is below 10. When I'm talking below 10, if you see the RSP, other things, all the rupee loans, but we consider around $12 to $15 million buyer's credit. Where we are paying hardly 2%. So our average cost is below 10% this year. Going forward also it will be likely to be around 10, below 10% only.
Margins?
Margins too, it's very, very difficult to ascertain right now. We are first year operations and we have to establish ourselves in international market as well as domestic market.
Mr. Mittal, you know why I'm asking you that is because if you're doing 300 crores on the top line, if you do margins of around 10%, you'll be at around what? At around 30 crores approximately. And your finance costs, even if I take it at around 8%, then most of your operating profit will go to your finance costs. Am I getting those numbers right?
No. Let me explain you that the numbers what you are talking 10% margin that is pertaining to prior old units. where we have a lot of limitations. We have only 2 processes, where this
Right.
company, new units, we have 7 processes.
Correct.
So margin will be much, much higher, but you know the limitations, so I cannot speak clearly
So-
the numbers. At the same time, finance cost, other things, and margin, and top up, if you consider the subsidy which we are going to get from government of Maharashtra, which is a 9% on the GST regime, and without GST regime, 12.5% VAT refund, it is substantial, inflow by way of revenue come in the company, which
Alright,
is
no-
not available to the existing units.
All right, Mr. Mittal, I'll be very honest. Last year you did an EPS of 36 paise. What exactly are you going to do, or what exactly are you targeting for next year? Irrespective of the EBITDA margins, you said you can't talk about it. You spoke about the various subsidies and benefits that you're going to get. The street wants to know what exactly is the EPS that you can deliver over the next 2 years, FY18, FY19. Any sort of color on that?
Well, it is, it's very difficult to reply, but let me tell you one thing, that EBITDA, this EPS 36 basis point, that is diluted you taken without giving the impact of the current year's operations. The equity increased on 1st April 2016, whereas the project started operations in this year. So this is not the right parameters to justify apple to apple. The operation will start current year of the capital raised last year for the project.
Correct.
We not raise the capital for existing operations. So if you consider the existing operations divided by the number of equity shares, then this will completely misleading to the investor communities. I had to take care of the entire investors family of more than 4,000 shareholders by justifying and by rewarding properly, by giving good corporate governance, at the same time the good numbers in the coming years and this year.
Fantastic, Mr. Mittal. You're sounding very, very confident, very, very focused. So that's good news, for all your investors, because
Thank
they are
you.
hearing what you're saying.
Thank
But
you.
I want to know, who are your clients? What is the breakup of your export and domestic business? And if it's in the export market, who are your big clients? I think last time you had mentioned there's some demand coming from China, if I'm not mistaken. You could correct
Yeah,
me.
China is also there, but at the same time, the major coming from the Europe.
Okay.
And this is one good thing, that hopefully the things moving in the European community, that they might go anti-dumping against China. So it is very good for the country. So we are getting excellent response from the Europe. At the same time, we added 6 more countries during last 1 month.
Breakup of domestic and...
Domestic will be around 40%, export 60%. But
Clients?
my endeavor is that we should target more and more export side. If everything goes smoothly, we might touch 80% exports in the coming years.
Who are your biggest clients, sir, and what sectors do they belong to?
They are mainly the big dealers in the Europe. Even single dealers, they can take up 30-40% capacity. That much, size of those dealers. Singapore, Europe, Germany, Switzerland, lot of countries, almost 29-30 countries we are targeting, and we are getting excellent response. The
Fantastic.
2 regions that are our
Right.
technology excellent. The plant is completely new. It's one of its kind in the world.
All right, Mr. Mittal. Thank you so much, sir, for joining in and giving us all those details. All the best for the coming fiscal. So that's the management there. They're sounding optimistic. They're saying the best is yet to come in FY18. On that note, Mangalam and me will wrap up on Chartbusters. You stay tuned. Trading Hour comes